rally as well. But let's kickstart the show now by focusing on the market. We have Rohit Srivastava joining us. He's founder and strategist at IndiaCharts.com. Rohit, thanks a lot for joining us. It's always great to have you on the show. And now I've started to think that every time we have you on, it feels like a bit of a different mode, right? Last time we had you, of course, in the day when the mid caps and small caps had a very big fall. You were sounding a bit pessimistic as well. Do you think that what we're getting now is just a bounce, or do you think that this is the start of a decisive move higher? And are we out of the woods now, or do you think that we will still face resistance in the near term?
No, so I do think that the momentum that was there earlier has been put to a halt for the time being. It is a good time to really step back and take cognizance of what is going on globally, because I think the risks from global equity are much more, and they can have an impact on domestic macros and so on. And that is why right now I would look at every bounce as a corrective bounce, not the start of a new runaway move, and therefore be extremely careful. So therefore it will become more like a trading market. It's good for those 500, 700 points up, and then look for another 500, 700 points down, but not a runaway move. So that is what we'll get into. And like I said, the risk is that if the US does tip into the recessionary mode, then there will be more downside than upside. So that is what, and that is why my sense is that rallies, especially for investors, this is a good time for every rally to create some level of cash for that risk that is likely to be there in 2024.
The only thing that's really surprised all economists and investors is the fact that US has not gone into a recession in 2023. Everyone was waiting for it, beginning of the year, middle of the year, year end, but the data continues to be strong and GDP estimates continue to get revised higher despite those sky-high, interest rates. But you believe it's a good time then to raise the cash levels to prepare yourself for a potential US recession next year. If someone has to stay invested in the markets, what would be the safe spots according to you?
It's not going to be easy, but when you look for safety, you end up going to the defensive sectors, and probably a pharma and an FMCG have historically been the defense to a weak market. Even if they don't go up, they go down less, and to that extent, you get some degree of capital protection in those sectors, and that is why they do become attractive when it comes to portfolio allocation. But in general, if the markets do turn that negative, because we are talking about either a US recession or not, a US recession typically has meant an S&P decline of up to 30%, and that can hit us hard, and therefore it ends up affecting most sectors generally in terms of price. But relative performance, like I said, sometimes the pharma and FMCG tend to do better. And specifically, I think pharma, which has been one of the poor performers of the post-COVID period, except for the initial few months, might be an interesting place where there's less allocation, and some of these stocks have actually been beaten down a lot, and there may be pockets of value out there. So that may be an interesting place to keep an eye on.
Okay, the pharma pack could be interesting to look at a time like this. Rohit, let's talk about a slightly more near-term view, right? Because even if you're trying to play in this market, yes, you might not be able to take a very long-term call. But say for the next 3-4 months, are there pockets that seem better placed to you? While we're not in a US recession yet, are there pockets where you think that it's still okay to put your money? Or do you think that there are some places that you would absolutely avoid? There are pockets which have run up a lot. Do you think those are pockets you would avoid for fear that they might come crashing down the hardest as well?
Yeah, so I think apart from the defenses, which I've already spoken about, it's going to be very, very hard to call because everything else is growth, right? And growth usually takes the biggest hit when something like that happens, because if, say, for example, rates in India do actually start going up, that is the macro risk. In a weak environment, you'll see the currency weaken and force the RBI to raise rates. So if rates go up, everything that is interest rate sensitive ends up being hurt. Growth sectors end up seeing their valuations pull down, and so it becomes very hard bet to stick on to those views from a near-term perspective, or rather medium-term perspective. Very, very short-term, is all we can say is that the market did become very oversold recently, which is why we got this bounce. Have those oversold readings completely unwound themselves? My answer is probably not yet. So it's not that the fall is imminent. It may not be tomorrow morning. It may still be a couple of weeks ago. It's possible the Nifty pauses at around 19,450 for a while. Then it even surpasses that. And if it does, then we end up at 19,700. All that is possible in the short term, that we see slightly higher prices from where we are here. And we should wait for that. But the main point is that we may not be running away to new highs now, and that, or at least new highs may not sustain if they happen also at all. And that is the risk we need to keep in mind.
So your view is that in the next, say, 2 months, the Nifty trades in a range? And what would that range be then? Because right now we turned... Go ahead.
Yeah, I think I would put 19,700 right now as the top end. I'm not sure if we can go beyond that. So I'll put that as the top end right now. The bottom end I can put as low as 18,100, which is sort of a 61% retracement of the entire rally that we saw from March. So these could be the top and bottom end of the ranges for the time being, till we really get clarity on where the US is really headed in terms of the economic direction.
So 18,100, because right now we turn from levels of about 18,836, 37 thereabout. You see the possibility of the Nifty going down to 18,100, but that's in the event of a US recession, right?
Yeah, so I think, see, in the event of a US recession, you might even break 18,100. But if I have to put risk, basically, what is my risk reward right now? The broad range, since you mentioned, is 19,700 to 18,100. We can gyrate both ways based on the news flow. We may not break 18,100 if there is no recession. That is what the main point is. So we may not really go below that. In fact, if things can really settle down, we may not break 18,700 also. But will they really settle down is the question. And the yield curve essentially is the watching point, because it has started to steepen. You mentioned earlier that all of last year we did not see a US recession, which is true. And even I was bullish for most of 2023, only up to around 2 weeks ago that we've actually changed our view on the market. And the reason for that was that an inversion itself doesn't mean a recession. An inversion simply means the recession or such an event can be possible 6 to 8 or 12 months down the line. And so for that time period, unless something gets worse, you remain bullish. Now what we are seeing is the first loss of momentum from that rally. And second is we're actually seeing the steepening of the yield curve, which means after it inverts, it went down to a minus 120 points on the 2 and 10-year bond yield. Now it is down to around 20-30 points. So it's significantly reduced that difference. And when that difference starts reducing, you start anticipating that the recession possibility is far more closer than it was earlier. And that is when equities start to sell off, which is what we've recently started to see. And that is where, so unless we see this ease, as long as the yield curve is steepening, I think you want to be out or away from risk assets, or reduce your weightage, manage risk accordingly, and keep in mind that this is a potential event in front of us.
All right, Rohit, thanks a lot for taking us through that quick call on the market. Always great having you on the show, and we hope to touch base with you soon again. That is Rohit Srivastava of India Charts telling us that he does see a near-term resistance for the Nifty at 19,450. So just around 60 points from these levels. In terms of the advice, he's saying it's probably a good time for investors to raise their cash levels in anticipation that there might be a recession in the US, maybe sometime next year, halfway through that. But with that,